The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Friday, we saw the release of the August World Agricultural Supply and Demand Estimates Report from USDA, and we got a cut to corn and soybean yield as the trade expected. In fact, the number was a little bit lower than the average trade guess. We saw some cuts to the demand side of the equation and more. We're to try to make sense of it all and talk about the market reaction here today. We welcome back into the program DuWayne Bosse with Bolt Marketing joining us today. DuWayne, always good to catch up with you, my friend. I hope you're doing well.
Yeah, doing great up here. Interesting day. Good to catch up with you too. Report days. I always like report days, but they don't always go my way, but I like report days anyway.
I'm with you. I mean, report days are fun. They're frustrating. They could be stressful. They could be joyous occasions on certain days, depending on whatever number USDA throws our way. And, you know, we could debate these numbers all we want, but at the end of the day, it's what's in front of us. And we just got to keep that in mind. And USDA, you know, kind of the headline sexy number, of course, is corn and soybean yield. And corn yield coming in 175.1, soybeans 50.9. Both slightly below the pre-report trade guess. I mean, as you saw those numbers, DuWayne, and what you're hearing from farmers across the country, do you agree? What's your thoughts?
My first thought was, wow, okay, that soybean number is lower than I anticipated. And soybeans, every bushel is a big deal. So that caught my eye right away. And then my train of thought quickly went to, I think those are the August 1st yields and not the August 11th yields. And what I mean by that is that's when we gathered, or USDA gathered all this information, right? Well, since then, we've had an amazing couple of rain systems come through the Midwest. Now, I know some people got missed out, but you know, you look at even like yesterday where the drought monitor shows the most severe drought was some of the areas that were getting rain this morning. And I think that's why the market kind of took, even though the yields were lower than anticipated for soybeans anyway, yeah, for corn as well. I think the rain in the forecast, I think the general thought of that might be the lowest yield number we see this year, pulled the market down in the close today.
Well, and thinking about, you know, the numbers that we got from USDA, they're interesting numbers for the August report because you see that USDA, we have farmer surveys with NDVI satellite readings, and you think about the satellite readings, everything's at or above average except Iowa and Missouri. So you got to put that into perspective a little bit, as it's, you know, we're getting surveys and satellite imagery. We're not getting boots on the ground yet. USDA's changed that to September.
Right. I know a couple interesting reports here for the yield factor anyway, the supply side of the table. You know, before this report, it's always been just formulated data to try to come up with the yields, you know, off of crop conditions and that too, you know. But yeah, this one was farmer surveys. So you could see a big adjustment, and we did see a fairly decent adjustment. It just didn't really move the market. And then, yeah, next month is a really interesting one where we get, you know, boots on the ground, you know, pull the husk back, count some kernels and see what kind of yield we got out there. So, but believe it or not, it always seems like we just kind of fine tune it from here. This was a big one to see where they came up with the yield, and it wasn't bullish enough. It's a good way to sum it up today. We needed the yield, especially for corn, to come in sharply lower, probably below 170 to really rally the market, and just didn't have that in the cards today.
No, we did not. Demand side of the picture as well. I mean, we saw some cuts there, but I think we all expected and knew that USDA had to do something just because demand has been so poor, DuWayne.
You're exactly right. What did we have? You know, feed and residuals down 25 million. Exports are down 50 million in corn. And that 50 million, you know, that could be just the start of it. I think last time you and I talked, I pointed out that USDA at that point was expecting a 450 million bushel increase in exports year over year, which can happen. But at the pace we're at right now, it sure doesn't suggest we can even get to last year's numbers. So I was afraid this would happen. Yep, we'll get a lower yield and they're just going to lower demand on the other side. And it's totally justified. So in the end, you still got a 2.2 billion ending stock for corn, which does not suggest prices have to go higher. A lot of questions after the report from producers of, well, how low do you think it has to go? And I wish I knew exactly, but I will say this, without some sort of different bullish story, the path of least resistance is definitely lower for D's corn yet. I don't want to exit hedges yet. Somebody asked me about that. 2.2 billion, Jesse, I don't know. Is that 420 D's corn? It sure could. The funds are barely getting short now. What if the funds want to go short a whole bunch of corn here? The only bullish story you probably got out, getting away from the USDA report, I'm sorry, is that China has had some really tough weather lately, some flooding in the northern regions there. USDA did lower corn production from China 3 million metric ton, which is a significant and aggressive cut. Now, China's never going to tell us what kind of production problems they have, right? My other broker walked in my office and said, well, they've got a record crop. I can tell you that already, because that's what China's going to say.
No, that's a good point, but it's something to keep an eye on. And I talked with some other folks here lately talking about just the demand picture as a whole. PNW, there's some ports on the PNW that are shut down because there's just not enough demand right now. We're not moving a crop out of the PNW to places like China, and China's going to Brazil. They're going to South America. Yep. So I mean, that demand picture, I'm with you. It's not looking good. I don't know what it's going to take to help restart that demand picture here for U.S. commodities, and in turn, what would help these markets out. I don't know what it's going to take here, DuWayne.
Well, you're a smart guy. I think you do know what it takes to get better exports. We just don't want to say it out loud. It takes lower prices. It's a Friday. We don't want to talk that way, but no, that's what it does. Now, you can't have a rallying market and better demand. It's not Econ 101. So that's why we're bearish here and hanging on to hedges. And, I was a little bit worried today that there was a chance USDA would come in and lower acres. If you remember this winter, I was tooting my little horn saying that they're just too high with acres. I don't think we have that many principal crop acres. Well, sure enough, we planted everything we could this year. I think prevent plant, I saw for North Dakota came in like 2.2 million. That's of course the biggest state with prevent plant this year. And we were, remember all the snow we had up here, we were wet, but even with that 2.3 million acres of prevent plant in North Dakota, we still planted a lot of corn, a lot of beans. Actually, I think the acre adjustments for corn and soybeans were up a little bit, weren't they? So the harvested acres, so we didn't get any big surprise there, and we got a big supply and poor demand. I'm really rambling. I wish I'm trying to come up with something different for corn, but I'm just bearish.
No, it's almost the best we could say. Well, and here's something too. You bring up acreage. USDA raised harvested acreage for wheat by 200,000.
Yeah.
Wow. That was a bearish surprise, DuWayne.
That was because when rumors started floating out there that USDA was going to use some FSA acreage numbers in this report, everyone started thinking, oh, I bet you wheat could be lower. No, here's your curveball right at the chin, a little bit higher. So I ended up with a little bit of a bearish wheat report, kind of depressing there. Spring wheat production down a little bit, so that was okay. But more acres, like I said, that surprised me. I guess we just managed to plant every nook and cranny this year. It's funny, last year we didn't have this many total principal crop acres and we had higher prices during the spring, but it does go to show though, farmers just want to farm. They could get it in late, they got it in late, and there was a window to get everything planted. So
I've heard some production challenges though for spring wheat. That's something that we got to keep on our minds, I believe. Some early headed out spring wheat, it just doesn't look very good, DuWayne. What are you hearing? I know South Dakota, I've heard some of that issue.
Yeah, there is. It's funny. We were hot and dry in June. We were kind of dry in July, expecting it was really going to hurt the wheat. And now all of a sudden, as we get to harvest, it starts raining. So I really feel for the guys there. That's where some of that damage is coming from you're talking about. But I gotta say, some of the combine reports I'm hearing, these yields are better than anticipated. It's early on, but I don't know. I don't think the yield's going to decrease at all. About like the technology in corn and soybeans, it's amazing. The yields are pretty good so far.
We are having a conversation today with DuWayne Bosse from Bolt Marketing joining us here as we recap the August WASDE report and the market reaction. And, DuWayne, below $5 D's corn now, $13 Nove beans. I feel like if anything coming out of the report, the fundamentals underneath the soy complex are better, obviously, than corn. Mm-hmm. So, I mean, I feel like there's a chance we can keep this thing around 13 in Nove beans, maybe, depending. But D's corn, to your points earlier, I mean, 450, 420. I'm a little worried to the downside here. I mean, just looking at the two, it seems like beans have a better story still.
Absolutely, Jess. You're right. No, if you just gave me just the soybean numbers by themselves, I would have been buying the soybean market beforehand. Because that's a good tight ending stock. 245 million bushel for an ending stock. It's the tightest we've been since 2015, 2016. That's saying something. The market, though, like I said, back to that yield number, that's how we got that tight. I think the market thinks that yield's going to increase. And I do too. Try not to get backyarditis because, we've gotten nice rains up here since August 1st. But, that's what NOAA was forecasting. So, you bump that yield back up to a 52 or something, then that ending stock gets a little bit more over 300, say 350. Well, then it's adequate. But I think you're right. I think we can hold this 13 area. We don't have to go lower. Do we have a reason we have to go higher? Probably not until China steps in and buys more of our beans, which they are, and more of our corn. We just need to see it. Everyone's still worried with the crop size out of Brazil, rightfully so. And now this week, it seems like we're starting to throw those estimates for next year's production out of South America. And that's really scary. Brazil expects a little bit bigger crop again, another record, but it's the Argentina coming from the massive drought they've had this year, Jesse. If they bounce back to even trend line, you're talking 20 million more metric tons. So that would be a problem. So, but no, soybeans are better fundamentally. We're only about 60% sold on new crop beans. And I think that's a good place to stay right here at this price. If you shoot up to 14, then you sell some more, you go down to 12. I think you can lift some hedges then. So.
Yeah, I have to think that the recent rains really helped out that bean crop. Beans, as the old adage says, made in August, DuWayne. And I feel like that the recent rains across much of the ag belt really had to help out some soybeans.
Yeah, no, absolutely. I think so too. It's funny up here where I am, we get the beans planted kind of late, especially when we have a late spring. And they look like junk. I'm ready to disc them under in July, and then August comes around, then you get a rain like we've had. We've got 4+ inches here recently with several different rain showers, and man, they shoot up. They look great. Still won't know what they yield because that's just the typical bean plant. You don't know until the end, but the rains helped a lot. And I think you can call almost anyone and say that. They're going to say the same thing. Like I said, again, though, I know there's some areas that have been missed out. I don't mean to rub it in, but the market's going to rub it in anyway. So I guess you're getting it from both angles.
Let's talk livestock. Maybe we'll find some better stories to talk about there. I mean, a little bit of a down day in cattle on Friday. This cash cattle market has been quite interesting as of late, and I think probably even since the last time you and I talked, DuWayne, this cattle market hasn't moved a lot. It's been pretty choppy the last month or so. So I guess I'll take it back. Maybe we can't find something positive here in cattle today. What's your take of this cattle market, fats, feeders? I mean, it just feels very choppy lately.
It really does. It is. The problem is technically, since we talked last, we're working off this key reversal on the charts. And technically this time of year is when we see our seasonal highs for feeder cattle for sure and start to pull back. So I think you got your technicians wanting to sell rallies, and then you got the fundamental traders like I tend to be wanting to buy it because, like you said, the cash market's been interesting, meaning the second highest ever last week. So very good there. Cutouts were maybe a little bit higher this week, grinding higher. So cash, I haven't heard a lot of news. Maybe there was some happening today and I got messed up with the report and didn't hear it, but I'm guessing you hear cash cattle later this afternoon. If you do, it's probably steady to $1 higher again. It seems like the demand is there. Packers don't want to pay anymore because they might even be operating in the red a little bit here, but just to get your hands on them is tough. Very current in the feedlots. Like I said, feeder cattle should pull back this time of year. But boy, it's hard for me to sell it though too, Jesse. I mean, the few yearlings that are coming into sale barns are just gold. So,
yeah,
$250 is a great price. And if someone wants to hedge and protect them there, we're right here to do that for you. But I wouldn't do it by selling the board. I think I'd still look at those put options or the LRP policies, because I feel like we can get to 260, 270, but the 300 I was wishing earlier, I think that's out of reach now. To get there, we would have needed a lot of heifer retention and pastures to green up this fall. And I don't think we're going to get there.
Looking at some of that cash cattle activity on Friday afternoon, 2,500 head sold Nebraska, 188 live, 295 dressed. Okay. Small amount in Iowa, 298 dressed, and then some bids in southern feedlots still around 177. So still waiting for more activity, but that's just it. It just feels like that this cash market, it's waiting until Friday, and then it's pretty much like only the absolute essential business that needs to get done. What's been happening here as of late, DuWayne.
And that's because it's at a higher price that packers don't want to pay. So they buy just enough, and they've wanted to keep slaughter back too, to keep the product, the choice box beef up higher. So you're right. That's exactly what it is. But the supply is tight enough in feedlots that even letting just those few show lists go, we're still current. Where years back, it seemed like if packers pulled back a little bit, then we got heavyweights and guys that have to sell them next week. And whenever you have to sell them, they're sold at usually lower prices. So no, it's a good market. It's still very solid. It's hard to trade right now. Like I said, technically it looks like a high's in, but fundamentally it looks like you can keep going. So it makes for a challenge here.
Hogs had a decent day Friday, rebounding from some lower trade midweek. I know August hogs go out the board Monday, pretty close to the cash index, and you got a huge discount to October. We're kind of getting to that time frame here seasonally, though, where I feel like this hog market, there's usually not a lot of momentum to the upside at this time of year, DuWayne.
Right. No, you're exactly right. You get to this time of year, the seasonal tendency is for it to go lower, and cash is starting to do that with the lean hog index drifting lower. Cutouts are drifting lower, but still at very good levels. That's why August is at over 100, right? It's 102, been 103. It's a very impressive market. But yeah, it's trending lower. And you look at a chart, looks like a top is formed when you look at the October. So we talked to just a few of our hog producers and wonder about, well, should we hedge? Really hard to hedge at that huge discount that October is to August. You feel like, well, can't it come up and meet somewhere in the middle? And I kind of think it can. I think October is a little too low, if you ask me here. Now, today the chart looks good. Yesterday looked horrible. We gapped lower opening, but today we did a key reversal technically. So it looks like we could bounce. So once again, lean hogs are hard to trade. What a big surprise. We're going to shock everyone with that tidbit here.
Well, before we wrap it up today, we should touch on the outside markets. I know we've had the consumer price index, the producer price index all out here this week, and fairly quiet day in the stock market Friday. Crude oil is still sitting above $80 a barrel, and some folks keep saying that's a canary in the coal mine. If that goes higher, it could help out commodities. I mean, overall, we'll throw it all into a basket here. Final question, DuWayne. What's your thoughts on the outside markets, energy, stocks, etc.?
They just look solid, don't they? They look good. Stock market's good. Crude oil, we traded that the last several months when it was stuck in a sideways pattern because it was kind of a little bit easier to trade. It just would go back and forth. Beautiful upward trend line here. And you're right. As crude goes, usually that's how corn goes too. And that's really helped the ethanol plants be profitable, 40 to 50 to 60 cents per bushel profit. So they're going to keep grinding as much as they can. But obviously, if they know it's a little cheaper a month from now, they still won't pay you much for that corn. So crude oil looks good. Production, OPEC, Saudis are backing off, so it should stay that way. I don't know how high it can go, though, Jesse, either. But I don't think we're going into recession, obviously. I think we avoided that, and interest rates have peaked. I think we're looking fairly solid here in the U.S.
Well, DuWayne, if folks want to reach out to you, get some advice on their marketing plan and more, I know they could do that very easily. How can they get a hold of you?
Yeah, they can just call us here directly, 605-448-2365, and they can always check us out online at boltmarketingllc.com.
DuWayne Bosse with Bolt Marketing. Always great to talk to you, my friend. Have an awesome weekend, and we'll talk to you next week.
You too, Jesse. Thanks.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.